Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist, BullseyeOption.com. Good morning. Great to see you both. Alan, we have markets in the red today. I know you do a lot. You're more of a technician. Tell me a little bit about how you're feeling in the markets, because we did have a record close yesterday. Some of your thoughts now.
That's exactly what I was going to say. Look, how long has it been since we had all-time forever highs in the S&P, the broad market barometer? So the NASDAQ still has some catch-up to do, but we've talked in the past about the key was going to be Google and NVIDIA, because they make up about 10% of the NASDAQ 100. And NVIDIA's storming back in a breakout above 140, a full V recovery on NVIDIA sends it up to 180, 190. So that's very positive. That could get the NASDAQ on a run again. And, we would see all the major markets on a move. We're in a bull market for everything, and that has not changed.
That being said, let's get to Freeport-McMoRan, a name that actually ran up on the China stimulus. We had monetary and fiscal stimulus, and it gave a boost to the Chinese stocks as well as copper, and ideas of some more demand to come. Now there's some uncertainty whether or not China will provide more stimulus, and that has brought things down a bit. Some of your thoughts on Freeport-McMoRan right now?
Well, what I like is a second chance play, and that's exactly what this is. It had a straight breakout, a rally up, and now it's taken a little pause. It's gone back down, filled in some of those gaps down below, and it's come back to its breakout, which is key for a technician as a trader. So we've been seeing the stock trade between 40 and 45 for 3 months. A breakout that targets 50. So we're up at this 50 level now, but you want to lean on that 45. 45 is in a super level of support. This is a stock that's 10% off its May's highs, is 20% off its all-time record highs in 2008. So as a copper play, there's a lot more upside. We're hanging around the 450 level when you look at the commodity. So a rally back to the $5 top of the range could send a breakout on this stock. So I love the risk reward. I love the back to the breakout area and leaning on support at 45. A January 45 calls trade for about 650. It's deep in the money, has 3 months of time. And look for this chart to make another leg higher after it forms this kind of pennant formation, and a breakout above that top of that range would be a very strong signal.
Understood. Okay, let's see what Rick Ducat has to say about the charts, because someone, I saw one article that said, what happened to copper? Well, it's China. And so that's why it had that recent turnaround, had to run up and run back. Tell us a little bit, Rick, about the charts.
Pretty interesting chart here. We hit these highs over here, 55.24, and then the price action pretty much was a W-type shape here where we bounced off of this supportive area here. We had our trend line beginning with our lows. We connected it here, and then it held true the second bounce here where we made a slightly worse closing low, but we held on for the most part, and then managed to work our way back up to this resistance area, this set of previous highs here at our red line, 52. So we also have the situation that Alan was describing here. We had a gap level here. We had a big breakout there. And then we have retreated back to this green line here near 48, which is also the site of our yellow 21-day exponential moving average, a potentially important source of support. So now today we are getting, once again, a little bit of a bounce here. We are basically right at our volume profile point of control, the area of heaviest trading. So this will be a key area for us to work our way through, hopefully for the bulls to the upside. So when we look at RSI, trending upward here, momentum had been improving for a while, took off like a rocket there into the overbought area, but moderating a little bit now, trending downward, but still above the 50 midline. So we're above our moving averages. RSI is trending up. Momentum is favoring the bulls right now. And to Alan's comments as well, kind of the flag type situation you can see here where we had a steep push to the upside, a brief period of consolidation. Then the thinking is that hopefully the price will take out the previous resistance and continue in the upward trajectory. So that's kind of the thinking right there here. One other thing to just point out here, pretty good head and shoulders pattern formed. You can see that we had the big break below the neckline after forming shoulder, head, shoulder here. So just a good example of how you can look for patterns here. But in terms of resistance, well, like I said, 52, that's the mark to beat. And then we've got another set of highs there near 53.89. so around 54 we'll call it. To the downside, we really want to hold this green line here, this repeated low point in confluence with our 21-day EMA near 48. Then below that, kind of the top of our W shape here near about 46. So some pretty notable areas here on our chart.
Okay. Look, it was in overbought territory, then it pulls back, and then has room, I guess, to turn around. Some of your final thoughts here, Alan, on this name.
Right. It's a second chance play, and I love that second opportunity that the markets often give you if you miss out on that breakout run, which is obviously the most difficult thing to identify. So it's the consolidation, a rebuild of this overall trend, and another attack on that range top would really be a confirmation that we're in a solid situation using a limited risk option, obviously.
All right, next up, when we take a look at Exelon and the utilities services, it's worth noting that today Goldman Sachs maintained its sell rating on this name at the current price target of $39. What do you see here, Alan?
I just see a technical pattern here, and I also see money flow as one of my indicators. You see leverage long accumulation in this. So there's some smart money positioning. Now this is 20% off. It's 2022 top here. It's a slow mover, but it's interesting to note that two out of the top three stocks in the S&P were energy stocks this year. So, this sector has kind of turned from a dinosaur into, a runner. And EXC has some good risk-reward potential. It's got a very strong trend from its recent low. It's taken a bit of a pause. So, again, another second chance opportunity. It's gone from 35 to 40, which targets 45 on this uptrend. I'm looking at an April option. April has 6 months of time. April 35 call stream for about 550. It's 450 in the money, so the expiration break even is $1 higher with a strong trending market. And there's a lot of things going on in the background with these energy companies, as we've seen with Constellation and VST. So, these technology companies are turning stodgy energy companies into more of a technology type play, as they have the need for this obviously extreme amount of energy and power to run the AI products in the future.
All right, he's a believer, Rick, in second chances and Exelon that has some room here. Please, the technicals.
Sure, yeah, definitely. So we can see this is another kind of interesting chart setup here, kind of unusual. Once again, kind of a W shape, really. You can see we had a big decline, rally, decline, big rally, once again up to that same resistance point here. So we can see that this 41 level, it's not necessarily our highest price level, but it was our best close. We did have some intraday highs beyond that, but the best close is about where we stopped during our recent rally here. So we've kind of got a significant resistance zone here, because on one hand we have our best close kind of resistance line near 41. We've also got this very gently sloping blue trend line going downward that pretty much is on top of that area. So by a couple of different measures, the area near 41 would be very important for bulls to overcome here. So more recently, kind of a rising wedge type shape here. We had a repeated boundary that we could draw there, happened to match up pretty decently there with the next set of highs that we saw, and here as well. And from here, we had this low point. We held the line above our previous 52-week lows. Sharp rally here. We're up like, just off the top of my head, like 15% or so roughly from this area here. But we are having a little bit of a stumble. We are below our yellow 21-day EMA. We made a couple of attempts at retaking it, but not really quite successful yet. And when we look at RSI, we can see that the momentum is accelerating to the downside. We had this more gently sloping trend line here, but this also exhibited some bearish divergence here. RSI made a lower high, price made a higher high, a bit of a mismatch here. Then you can see our green trend line as well has been invalidated. Now we are roughly right on that 50 midline here, so a bit uncertain at this point. Support and resistance here. Green line, recent lows 38.88, and then the next set of lows comes in near 38.17 with our orange 63-day EMA in the middle. So the area between 38 to 39 would be supportive in general here. To the upside, our red line 40, and then 41 is ultimately the big one that the bulls would want to break above.
Okay, so watching those levels, Alan, what say you?
Just very simply 35 to 40, a breakout of 40 sends it to 45. Just looking for this momentum to continue. That simple.
Okay, next up, Vale. When we take a look at this one, not a beautiful chart. I mean, it's well off the $16 highs. It's closer to its most recent lows. Though it's giving it a go. I like the little giggle there. Let's talk about Vale. What do you think is the trade here for you, Alan?
All right, it's about risk reward. Again, you have to be very selective for stocks that maybe have not participated in the rally. This stock has a PE of 5. I know we all talk about how the market's overvalued and PEs are extremes. This has a PE of 5, so it's got a lot of value from that standpoint. It's 50% off its 2022 top and 75% off its 2008. 50% off its high from 2000, 75% off its high from 2008. So the point is that it's at a discount to where it's been in the past. That doesn't mean it's going to go higher, but the technical pattern is set up with a nice bottoming formation. We've been between 10 and 14 for a year, 10 and 12 since June. So I'm seeing here a chance for a move here. It's come back to its breakout at 11. If you look at this bottom base, it bounced when it broke out at 11, and we come back to that 11 level. So I want to lean on 10. 10 is that super support, that bottom. You can buy a March 10 call for $1.60. So the expiration break even is 50, 60 cents from where we stand right now. And you've got 5 months of time. So I like the risk reward in this play, in this sector, and considering where it is in historical terms, I think the bull side is definitely has more potential than the downside in a stock that had been stuck for a while.
So overall, I mean, you're picking names that have been beaten down. You're generally bullish, it sounds like.
Yes.
Rick, final thoughts on this name as you look at the technicals in these charts?
The first thing to consider with this company chart here is that this is an ADR, so it's naturally going to be more gappy. You have to use a little bit more discretion when identifying important gaps here. So the general read here, steep trend line down here. We kind of stabilized a little bit, formed a bit of a range there, and then a more moderately sloping trend line going down, connecting across these highs here, you can see. So this downward trend line still in play here, but we also have a competing upward sloping trend line. Once again, rather modestly sloped, not really making any extreme moves or anything so far. But, like Alan said, here was the bottom, right around 10, 966 was the intraday low. We once again held support close to that level and did not make a new subsequent low. Now, we had a nice rally here, but we were halted right around this point here, this red line near about 12, just a few cents below 12. Happens to match up pretty closely with our trend line there. So once again, a resistance confluence that price couldn't quite take out there. Now we are below our two moving averages, yellow 21-day and orange 63-day, which are signs of potential trend degradation here, but we haven't really made a huge breakout below them, and they are quite close to each other here. So there's still hope to be sure that we could rally and recover above these levels here. RSI trending upward once again here. So once again, a bit of a question mark because we are very slightly below the 50 midline, but we are holding on to our trend line so far. So it wouldn't take too much to kind of reassert ourselves above that 50 midline and give us that bullish signal once again here. So if we were to continue moving to the upside after we break out of our moving average cluster near about 11, this red line, like I said, that would be the mark to beat here near 12. And indeed, we actually have a couple other things just above that. We have our purple 252-day EMA and our volume profile point of control just slightly above that. So really between 12 to 1220 would be a very important resistance area for us to keep an eye on here. From there, 13, you can see we had a gap here, a series of lows here, and then a high after it was breached to the downside there. So 13 would be another key area to watch here. To the downside, we had a big gap here. That was the high point before the gap. Green line, 1044, and then the next set of lows just below 10.
It's interesting. Thank you for that, Rick Ducat there on the charts. Alan, interesting group that you picked here with materials. You had commodities with Freeport-McMoRan. You had utilities with Exelon. Final thoughts here, how you're going about, because these are not the normal, a lot of people are into tech and finance and energy,
right.
They sort of, the mainstream. These are a little less mainstream, I'd say.
Right. For me, it's all about probability. It's not what I trade, it's how I trade. And when you look at Vale, it's got that bullish divergence bottom that I've talked about on your show over and over again, where we saw new lows in Tesla and in Apple and some of the big names. And you know that you're seeing a sentiment shift because it makes new lows but not new highs and implied volatility. That's a sign that short sellers are running out of strength. Same thing happening here in Vale. Obviously, it's not as sexy, but it's very, very nice risk reward. If you get above 12, that sends it to 13. And at 13, this option gains 100%. So it's about probability, it's about math, and just set yourself up for success using limited risk options.
Good to see you both. Thank you. Rick Ducat there on the charts. Alan Nuckman, bullseyeoption.com. Thank you both. Coming up next, we're going to spotlight Tesla. The big robo-taxi event happens tonight. What do we need to expect? This is certainly a very important moment for Tesla. Trading 360 here.